Welcome to the Forever Cash Life Real Estate Investing Podcast with your hosts, Jack and Michelle Bosch. Together, let's uncover the secrets to building true wealth through real estate and living a purpose-driven life.
All right, so here we are. Land. Why land? Well, very simple. It's the year 2020 and real estate is hot, right? Everywhere you see, there's like announcements and there's seminars and everyone is making money in real estate. What they don't tell you is that flipping houses is freaking hard, right? Because there's a lot of competition. You got to fight against all these other people that come out of seminars and even the professionals and so on, and all these different things that you've said. So now let's compare to that land flipping. Land flipping is a concept that Michelle and I have discovered and professionalized and optimized and perfected over the last 17 years, basically. And we found this out back in 2002 when we also wanted to get into real estate. And in 2002 was very similar to today. There was a lot of competition. There was a lot of people dealing in houses, and we just couldn't get a deal, right? We found one deal that was a triplex in a bad area of town. That's why we got it, because nobody else was wanting to get in there, apparently. We got that deal under contract for $45,000. We thought it was worth about $80,000 and $90,000. We only marked it up $5,000. We wanted to do what's called a wholesale deal. Did you put a deal under contract? You pass it right away on to another deal, to another buyer, and they do the rehab. Well, little did we know that we had misestimated all the repairs because we back then didn't know anything about real estate. Now that's 17, 18 years ago. Since then, we've done 4,000 land deals. We've owned 400 apartment units. We own rental houses. We own commercial property. We own a hotel. We own all kinds of stuff. So we have now obviously learned the tricks of the trade in abundance. And we keep learning, by the way. It's never ending learning, right? In 2019, we learned a whole bunch more about different areas of real estate in subject matters that we were not yet experts in. So it's a never-ending story. Real estate is an industry. It's not a method. Real estate is an industry, and within that industry, you choose your method. So what we chose was land flipping, or we stumbled into land flipping, because here's what happened with land flipping. So our very first deal, we ended up finding people that didn't want their properties anymore, so much that they had stopped paying property taxes. So we also thought, okay, it might be a good idea to send them a letter, because if they have stopped paying property taxes, and it's still like a year or 2 years before their property gets foreclosed on for non-payment of property taxes, or before it goes up for auction, perhaps they're wanting to sell a property prior to that to us. So we sent about 400 letters out, and we got about 20 phone calls. And the funny thing is that out of these 20 phone calls, every single one of them was a landowner. By the way, what happened with that triplex is we couldn't sell it, because we had misallocated or miscalculated all the repairs. It was not a deal, and so we basically let that deal go. So then we reset, and we did what I just said. We went into the tax delinquent space, but with direct mail, and we got a great response rate. Our first response rate was like something like 5 or 6%, and then since then we have had many times response rates of over 10%. Again, compared it to the house world, they often nowadays in the current competitive situation, people are lucky if they get better than half of 1% response rates in the house world. We're still getting 4 to 15% response rates on our letters and our mailers. It's a crazy world, because in land there's very little competition. But here's what happens. One of the people had a property in a smaller town in northern Arizona. I live in Arizona, so we started in our backyard for no other reason than we thought back then that we needed to go see the property. Now we buy properties from Hawaii all the way to Florida. We don't ever go see properties because there's no need to go see properties. It's just land. You have Google Maps, you have Google Earth, you have all these different softwares that you can use to look at the properties. And what's the difference between an aerial picture from last year and from this year is that the trees grow by that much. Other than that, there's really not much of a difference. So we wrote those letters. We got 20 phone calls, and they were all land. And one stands out because he accepted our offer. He was this guy with an acre property in northern Arizona, with a house on one side, a house on the other side, and the lot right there. And he was okay. He wanted to kind of move away from the state. He had just gotten to divorce. He didn't want to deal with things anymore. And he was willing to give that property to us for $400. $400. Now, not a $400 down payment or escrow deposit for a $400,000 purchase with a bunch of rehabs and stuff. No. Fully purchased of the property is $400 plus closing costs. Now, in this case, we actually did the closing ourselves. We didn't even hire a title company. We just did a title search. We figured out who owned this property for him, and then before, and then we just paid him $400 and sent him a deed. He signed it, sent it back to us, and we sent the deed for recording. And then when we went out there, we put a for sale by owner on the sign on there, and the neighbor from across the street comes up and right there on the spot makes us an offer for $4,000. If we would have gone with and gotten a title insurance for it, it would have cost us another $600-700. So let's say we would have been in for $1,000, and we sell the property for $4,000. They paid all the closing costs on their end, so we would have made $3,000 in basically like what? By sending out a few letters, talking to a few people, and sending out a few offers, and then they're agreeing to our offer. That's really it. And then driving up there and putting up a sign on the property, which is what we did back then. Now it's even easier. You post these properties on many social media platforms. So with that said, we started, oh, well, that was easy. Plus, were there any risk of us losing money? No. If you buy something for $400 that's worth $8,000, because that's the true value of the property was about $8,000, we're like in for 5 cents on the dollar. I mean, the worst case scenario we told ourselves is that we're going to go make $1,000 on that property, right? But we made $4,000, so only $3,600. We 10x'd our money. We have a very special couple here that is successful in real estate investing, and they are Warren and Michelle Davis. How are you guys doing?
Good.
Doing very good, Jack.
All right, wonderful. Let me put on my glasses so I see you better. No, put it back off. Let's have some fun here. So you're obviously, where do you guys live? You live in Phoenix, right?
Yes.
Yeah, we're both in the same city, and you are another couple of our successful land investors, right? Land flippers.
Yes, we are.
Wonderful. Yes. That's awesome to see. And I like the confidence in which you say, yes, we are. So tell us a story. Like, where did you start? Did you just stumble into land flipping? That's the first thing you ever done, and you immediately had success? Or how is your story? Tell us a little bit about how this all happened.
All right, Warren, go ahead.
Okay. Well, we actually got into real estate investing a few years back, probably about 4 years or so back. And we did not start with land flipping. We actually started with trying to flip houses. And so we learned this process that you were able to do this analysis and you could come up with these deals. And basically, long story made short, we implemented this process. We used to work full time during the day. Then at night, we work until like 10 or 11 o'clock at night doing analysis on how we could get contracts on houses. We worked this for about 8 months or so with zero success. We also had a coach that was assigned to us that would work with us on a weekly basis, cut our sessions off after about 30 minutes. So we struggled all throughout that process. We basically got one deal out of 8 months of work. But when I say we got one deal, that means we got one contract we could put on a house. So then we had one of our contractors go out and look at the house, and he said, I wouldn't touch that with a 10-foot pole. He said, you need to try to get your money back. So we scrambled and we got our money back on that deal. So basically we made no money in the land flipping, the house flipping side, trying to get a house under contract. So
now you attended the live event. You said, like, don't look anywhere. Then what happened?
And unfortunately,
Right.
we had been burned, right? So it's great that we actually could hear the heart of you and Michelle,
right?
And really hear, the testimonies and all the other people sharing what they did and what they
Right.
went through, and then that they took the chance, and then really going back and talking to either coaches. I mean, you left it open to be able to talk to people, network, and really get an understanding. So, and it wasn't like you were dangling things and saying, okay, you get this, and we could see something else is going to happen. And it was just, I don't know, we believed in it after we had the time with you all.
Yeah.
And so that really helped us go ahead and take the plunge. And we're really glad. I mean, we are really glad we did. We were very skeptical.
Oh, yeah.
I mean, because it had not been but a couple of months So we were really skeptical. We were seriously not going to do, anything else. But this was the best thing that we could have done.
All right. Well, that's thank you very much. I'm glad that happened. And so then what happened then?
Well, even after we signed up, actually, and then we came the mentoring part, and we wanted to do that, and we moved forward, and quite honestly, myself, I was moving forward with a lot of hesitancy at the same time, and I didn't really believe. I was doubting whether or not I could really be successful in real estate. And I tried to keep a brave front up for my wife, hey, I know what I'm doing here. We'll be fine. But on the inside, I know that I was really nervous about, moving forward and thinking,
basically, okay, like, crap, what do we do now? We just signed up for that.
Exactly. And if this didn't work, how do you recover again from another, bad situation?
I mean, that's a very, very serious question, especially after having already spent $53,000. Now, yes, ours is a fraction of that, but it's much less. But still, it's still a lot of money. So, like, yes, what do we do now, and so on. So then, how long did it take for you to get your first deal?
Oh man, it was so exciting!
It was great.
What was it? 2 months?
About three months. 3 months to get our very first deal. And we, when we got that acceptance, we accept your offer, and somebody actually was going to let us buy some property. And then we went through the process of marketing it. And then we started getting buyer phone calls. It was like I had to pinch myself because, this is the first time we had anybody want to buy anything from us. So,
and the exciting thing was it worked exactly as you said, exactly as our mentor said.
Right.
We followed the steps, and they said, if you follow these steps,
yes,
it's going to happen. So when we got that first, I accept your offer, it actually came through email. I was like, Warren, somebody said, I accept your offer. What in the world? This really works.
Yes.
So then we went, we were like, okay, this step worked. Let's see if the marketing part works, and if we actually get a buyer, how that all works. So that was the exciting thing about it. We got our first deal, and every step that through the modules and through the mentoring, it worked exactly as you said.
Yeah, that's exciting. That's super exciting. Then how much did you make on that deal? Was it a big deal, small deal?
It was it was a trouble deal, actually, by the way.
Yeah, a smaller deal. It was 11 acres, right? 11 acre deal.
Maybe $6,000.
I think we made about $6,000 or $7,000 on that first deal.
All right, that's nothing to scoff at, right? I mean, at the end of the day, the first deal doesn't make you wealthy, but what was the impact on your life on that first deal?
That's the whole thing. It started to build our confidence that we could actually do this. And me personally, I am a step kind of guy. Like, I like steps. I like to execute steps, and I didn't change anything. I wasn't going to change the letters that went out. I wasn't going to change the offer letters. I wasn't changing anything. I did exactly the way our coach told us, because he was already successful. And I mean, obviously, we'd seen somewhat of your success, but he was successful doing it. So I'm figuring we should just follow the same steps.
All right, we're back, and I'm super excited to host this podcast today with our guests, Clark Sheffield and JACE Mattison. How are you guys doing?
Awesome. Thanks for having us. Happy to be here.
Great. Thank you.
Wonderful. So Clark and JACE are co-hosts of a very interesting podcast that I came across not too long ago, and it's called Millionaires Unveiled, right? Where they interview net worth millionaires about their stories, investment decisions, portfolio allocations, and things like that. They have interviewed over 100 millionaires, and they also interviewed famous guests like Robert Kiyosaki, Chris Hogan, Tommy Wheelwright, Clark Jess, and amongst all these great names, I was one of the interviews too. I'm super honored by that. So I'm glad. I wanted have you guys on here because you have a unique kind of view, like insight into how millionaires think, and we want to talk about that a little bit. But first of all, tell us your story. The other part I'm very interested in before I ask the question is that you guys actually use that interview process to learn for yourself and get yourself on a path to being millionaires. And you're one of you guys is already there, and you guys are the other one is working on it. So I'm super excited about that. Let me share. How did you come up with the idea, and give us a little bit of your background? Who wants to go first?
Go ahead, Jace. So my background, I started after college. I went in Big Four accounting, got my CPA license. Before that, had several jobs, worked a paper route, had a lawn care business in high school like most people. Probably a lot of people don't even know what a paper route is anymore. But I had a paper route for most of middle school and all of high school. And then in college, had various jobs. I worked as a janitor for a little bit. I did some accounting work for a bunch of real estate companies, mainly in the self-storage space, and then also worked at a couple tech companies as well. And then after I did Big Four, got my CPA license, I was a partner at an outsourced accounting firm for a little bit, and then I went in-house with one of my clients. And so now that's kind of what I spend most of my time doing as a CFO for a building materials and hardware company in Texas. We've got all sorts of locations, about 40 locations throughout the state. And, you know, the podcast kind of came about. Clark and I had started discussing investing and investments. And, you know, we had our dad's portfolios more or less because our dads were pretty open with their investment strategies and everything. But Clark and I make a lot of jokes sometimes that our dads are a little bit more risk adverse than maybe we are. And that was all we had. And so we kind of wanted to know, you know, we have all these things, you know, these books, The Millionaire Next Door, The Millionaire Mind, that really got into the theory and kind of put some statistics to millionaires, but we never really had any actual detail of what does somebody do when they become a millionaire? How do they invest? Where do they put their investments? How much are they putting in certain asset classes? And so we really wanted to get a good idea on what millionaires do, how they invest, detailed numbers. Does their investment allocation change based upon where they are in life, based upon income levels? Do they stick with one asset class and always stick with one asset class? And so we basically kind of hatched the idea for the show.
And what's your results? Do they stick with that one asset class usually?
Yes, so most don't actually. And you know, it's very interesting. Most of the time they diversify a little bit. Now, I wouldn't say that they're spread across tons of asset classes until they get a little bit on the higher echelon of the net worth chain. But somebody who for the most part is going to be worth, let's say, under 5 million, you know, they're going to have a house. A lot of times that house is going to be close to paid off or paid off. But a lot of times these millionaires are also going to be in their 40s, 50s, and 60s. And then they're going to have various amounts in the market or in real estate is kind of what we found. We have a few that invested in small businesses, but a lot of times it's if they're an entrepreneur and they've kind of built a business. Okay.
So is it fair to say that they focused on, it's kind of almost my impression that I see, but you guys have the data now. Is it fair to say that they typically focus on one thing to make the money and then they diversify? Or do they make the money like 8 different things?
No, they make at least the initial capital. They're making it and focus on one thing, whether it's their job or whether it's one business or one avenue, and then diversifying. It's only once they get, you know, later in their career, later in life, that they then maybe make it in multiple ways.
If you could highlight 1 or 2 characteristics of those millionaires that you can find that they kind of had in common, what would that be?
I'll start with that. I think it's intentionality and focus. You know, I think regardless of how someone wants to allocate their net worth, regardless of what they want to invest in or what their plans for the future are, is they're intentional. You know they want to save, they know they want to invest regardless of how it is, and they're focused to do it. And sure, every now and then, right, like somebody has a failure or they slow down a little bit, but at the end of the day, these guys know what they want to do. They know what they're focused on, and girls, obviously, and they're intentional and their intentionality carries them and carries their investments.
Yeah. Okay. How about you, Jace?
I would just add resiliency and persistence. You know, it's going to take time for most people. A lot of our millionaires, like you hear the stories that they've had a failure or two, whether it's a bad investment, failed business, you know, lost some money on a real estate deal or whatever. They're still resilient. They're persistent. They keep with it over and over, year after year after year, decade after decade, to kind of get to that point.
Awesome. All right. Very cool. So you guys okay with a couple of quick hitting questions, a lightning round?
Yeah.
Perfect. Right, okay. Simple, easy question.
We can't say no to that, man, because that's what we did to you when you came on ours.
That's right. So that's true. I remember that. So these are very simple. What's the best book you've ever read that helped you through in your career?
We were both just going to answer at the same time. I just finished Miracle Morning by Hal Elrod. And, I was always the person that said I'm not a morning person, and I still feel that way. And he kind of acknowledges in the book that that's the case. But I've just kind of realized, hey, if I want to be successful, whether it's, whatever, in any aspect of my life, marriage, family, investing, I've got to be intentional with my self-development. And
right.
that book really helped me realize and understand that setting a time for yourself is critical.
Right. Wonderful. I read this book. I tried it. I failed at it because I'm the returning non-morning person. So I agree with the points of the intentionality and the things that you need to do. I just like to sleep until 8. This is just not happening in my life. So, but the other pieces I support there. Yes.
Right. Yeah.
How about you, Jace?
That's a tough question. I think the book that's making the most impression on me right now is a book I'm in the middle of reading. It's called Atomic Habits by James Clear. It was actually just recommended to us on our podcast. And it just gets into the detail of like how we form habits and the critical, mindset that develops around the way we do the things that we do. And for me, I think just understanding some of the psychology behind what drives some of our habits and how to change them has been super critical. And I'm not even finished with the book.
Awesome. All right. Wonderful. Next question is, what's the one thing you wish you would have done differently when you first started out investing or started on that path?
I wish I would have started reading earlier and listening to podcasts and just hearing, either stories or strategies or whatever. I think the earlier you get exposed to it, the earlier you start developing yourself, the earlier you continue to learn, you just get motivated, right? You hear stories of successful people, you read people doing successful things. And it starts making you want to do the same. So, I feel like I started that earlier after college, but I feel like I wish I would have exposed that even earlier in my life.
Okay. How about you, Jace?
I'm the same. I started investing and earning when I was a teenager. I still had opportunities to do stuff earlier. In fact, there's a funny story that goes around my family about how I spent $2,000 at Taco Bell when I was 16 years old and had no business spending $2,000 at Taco Bell because I was living at home and everything else. And, I look back to some of the money I was making.
How in the world do you spend $2,000 at Taco Bell?
In a year, I don't know.
A year.
Okay. Yeah.
I thought like you invited the entire city because it's hard.
No. You're gonna come, right? No. I look back at a great time, but if I would have been able to take some of that money and either invest in myself at that point or invest even in public markets with some of that money, I just look how much it'd be worth today at 31 years old, and that's probably my biggest, just starting early. I think anybody always wants to start earlier, get exposure earlier, but it's true. It helps.
Yeah. Now, I remember reading in a book about Warren Buffett one time, his wife wanted to remodel the house that he still lives in. And she spent making an addition, I think $35,000 back in the 60s or so 70s on that remodel. And he just almost fainted. He's like, do you know how much that will be once in 30 years from now, right? How much that will compound to? They still spend it, and I think it was probably well spent. But yeah, it goes to that same point.
Enjoyed this episode? Then make sure you like, subscribe, and post your comments and questions below the video. We're looking forward to hearing from you.